Welcome back, Outfunders. The markets are rolling on today on this terrific Thursday. Hopefully, you're having a terrific Thursday. It's also kind of like fallout from Fed Day. What's going on in the markets? And we got AAPL and Amazon earnings today after the bell. So, definitely things we can get through. We need to get through here and kind of diagnose kind of what's going on. And we're seeing some pretty good price action today. Let's just kind of go back to yesterday. So yesterday we got the hold. No shocking, no shocking there. Honestly, I didn't see any kind of recap about the Fed press conference. Maybe we might see something on Finance Yahoo, but I didn't really see anything about. They were for sure going to cut next time. Obviously, they're most likely not going to say that, but it seems like we got some strong hints that it probably will be coming in September. So yeah, there you go. Other than that, the market didn't do anything crazy. Had a little bit of uptick to it in the beginning and kind of pulled back down. But other than that, it was mostly flat from when we started the FOMC kind of time period, getting the rate cut decision to where we kind of closed the day. So not really too much kind of happened there. As far as Thursday, we did get a little bit of a gap up here, about 0.4%. Nice little pop higher there for 15 minutes of the day. And you see, it has been sell city since, coming all the way down. All right. So that's kind of how it looks intraday. And yeah, other than that, kind of see maybe what levels we're getting to during the day or on the daily kind of time frame. Q's kind of a flat open here. This is kind of an interesting look. So the Q's had a flat open, nice little strong move there first 30 minutes, we'll say. Then it's kind of just been pulling back. Also getting below the low of yesterday morning. So we're basically just now doing that. So okay, pretty good pullback here over the past hour on the Q's. And the SPY is currently down about 0.7. Q's down 0.9%. But taking a look here at the IWM, pretty much a flat open, a little bit of a pop there first 10 minutes, and it just rolled over hard. And the IWM, you can see yesterday, when the Fed was giving the, Jerome Powell was doing the press conference, you can see IWM had a pretty strong pop there. Popped 2%. Wow. Popped 2% from, pretty much the beginning of the press conference time period for about 30 minutes. Wow. That's a pretty strong move there. But the IWM is currently down 2.75%. DIA currently down about 1%. Nice little pop here on the open, but it's been selling since. RSP, all five of these averages, ETFs, all have this past 1 hour just kind of like straight down, sell kind of look to it. RSP down 1%. Nice little quick pop there on the open as well. So let's take a look intraday, kind of what we got. And yeah, the RSP went and made new highs yesterday. And huge comeback today, kind of getting close to the moving averages. Yeah, I don't really know if I like that. I don't know if I like that, but it's like, what are you going to go into big tech? I wouldn't want to go into big tech. So, yeah, the RSPs would probably still be okay. DIA down 1%, pulling into that 10 daily EMA. Did not make a new high over the mid-July high. Okay. So that's lower highs coming in for now. Obviously, we won't really know until we break this low around 397 or so, 398. IWM made a new high yesterday as well. Pretty large upper wick. You can see just a huge upper wick yesterday and just come right back down. Yeah, I wouldn't have liked how that closed yesterday. Didn't look good. Qs. Okay, so coming into the week, one of the scenarios we kind of talked about was kind of towards the later of the week, like Wednesday, Thursday, Q's SPY kind of having a look of what they're doing today. And Q's was kind of looking for, that retest higher up into the moving averages, maybe breaks it just a little bit. And then taking a look at the SPY. SPY probably making a run up into this candle that we put in back on July 23rd. And didn't really know if we would maybe break the high from that day, but definitely thought we would get up into that candle at least. And we did that yesterday afternoon, when during the press conference, and then obviously a little bit this morning, Thursday morning. So it kind of made sense. Hey, take a little bit bearish shot. We'll see. I mean, obviously we're seeing some pretty good bearishness over the past hour. And all you can do is say, hey, this is my game plan. I'm gonna follow my game plan. I'll take a shot. But it's also, you gotta have your risk tolerance. I mean, it can very much just bounce from here and just kind of consolidate sideways here for the next couple days, and then scoot bullish up on out of here. But if you design your game plan, what you're looking for, and it kind of dots the T's and crosses the I's. I know I had that wrong. I did it for a reason. Crosses the T's and dots the I's. There you go. Fine. You're welcome. But if it kind of lines up with what you're looking for, then yeah, okay. I mean, you got to take your shot. So there you go. I think it looked pretty good. I was kind of thinking maybe we'd see that at the end of a day, like towards the end, maybe like last 30 minutes or so, bullish kind of rise into the close, and then earnings kind of come out from one of these big tech companies and just kind of pushes us down. But that wound up not happening. We kind of, I think we were a little strong yesterday. We had a little bit of a gap up, too much of a gap up, honestly, for that to happen yesterday morning. So I think it's a big reason why we didn't really do it yesterday. And then we kind of just had a quick pop there on the open, nice little gap up again today. So yeah, we shall see. We shall see. So that was the FOMC. What else did we get today? We should have got initial jobless claims numbers, so we can take a look at that. All right. So initial jobless claims come in at 249K. Wow. Forecast is calling for 236K. Prior was 235K. Man, that is a brutal number. So we are continuing to see that tick higher. I want to see this 4-week average. Can we launch the chart? So here's the 4-week average, and you can see that trend higher on the 4-week average. The 4-week average to me it's important. I don't really, we don't really look at these all that much because it kind of smooths out the week over week kind of volatility and kind of shows you more of the smoothed out trend. I can get rid of the moving averages here. So you can see we've definitely had a pretty good trend going on, going all the way back to the end of April, beginning of May, and even a low point back at the beginning of January. So is it just a matter of time until the job market kind of breaks? It's always a matter of time, right? Yeah, other than that, unemployment data did not come in well. The other two big ones, as far as earnings, we're going to get today after the bells, AAPL. We talked a little bit about AAPL yesterday, and I did not put out the midday recap yesterday because I just felt like the afternoon volatility just would have made anything that we kind of talked about in the morning just totally irrelevant. But I would continue just to be selling out of any position holdings that you have on AAPL. This was a really strong move that we had May, June, first half of July on AAPL, and I know why it happened, right? The AI kind of getting catalysts for people to upgrade their phones and stuff like that. I don't buy into that notion, and that is just a me thing. And I just, I've been pretty clear on that. I don't I don't see how consumers are upgrading their devices. To me, that's more AI right now is much more of a productivity thing, a productivity focus. And yeah, I just don't see how AI is going to really help AAPL for now. I could be wrong. And that's the other thing is if I am wrong, I also don't feel like the upside is that substantial. So there you go. I mean, that's kind of the other part of it. I'd rather just be protecting capital on AAPL. I'm not. This is no way in saying like, hey, be bearish on AAPL. I'm not advocating for that. I just don't see the upside, and that's I see more downside, especially with this huge move that we had, basically from last earnings, and then we had the Apple AI event that we had back in June. So yeah, other than that, we'll just keep rolling. I had a no play on AAPL. Amazon would be an interesting one. I'd rather just sell options here, kind of like what we talked about with Meta and Microsoft over the previous couple days. Real quick, take a look at Meta. So we're talking about selling options on Meta anywhere from like 455, maybe down to about this level, about 440, just to get a good amount of premium. I didn't think Meta would drop off, kind of like Microsoft. Even if they did drop off, they'd probably just get bought up. I think they're doing a pretty good long-term consolidation in and around like the mid 400s to mid 500s. So I think you'd have been okay in the lower ends of kind of this range selling some put options. So that was a big reason why that yesterday worked out. You're probably taking that off, or you probably just leave it till expiration. It's probably gonna be completely worthless. Pretty good gap up on Meta though. As far as Amazon, I could also see the same thing. You're probably just looking to maybe sell options. You're gonna have one day, because options are gonna expire on Friday. So I mean, I would do it for Friday. I wouldn't want to sell options next Friday. Because if we come out next Friday, if we sell down tomorrow and then next Friday or by next Friday, we see some pretty good bearishness coming back in on the market, I wouldn't want to be selling put options where you're wanting to maybe collect premium. I think Amazon would be okay. Yeah, I think Amazon would be okay because, I mean, the other thing about Microsoft on their earnings was they were having a little bit of slowdown in the Azure cloud area. And so was Amazon catching up on growth side in Azure in the cloud space? Yeah, I mean, I'm obviously we'll find out with Amazon's earnings, but I think you'd be okay selling some put options maybe around 180 to 175 or so, like right under some of these wicks. That's just kind of what I'd be looking for. Because the other thing is, if we do wind up making down to this 200 moving average, which is around the upper 160s or so, you probably get a decent bounce that later on, if you're not digging that breakdown, you can probably get out of it later on. So anyways, that's just kind of an idea. Sell put options. If you get put the shares, turn around and sell covered calls until you kind of get out of it later on. But I wouldn't want to be playing anything extremely bullish right now over earnings. Meta has been one of the few right now big tech companies that has absolutely crushed it, and they're up 7%, and that's about it. Like there hasn't been other big tech companies really crush it. AMD actually had a decent day, but you can see over the past couple days they have come right back down. Jeez. So yeah, I wouldn't want to, and this would be something that you don't want to see from Amazon. So that's why you don't want to see multiple day kind of breakdown from their earnings. That's why you want to sell something kind of close, not super close, but far enough away that if it does gap down to like another 180 area, you maybe get a bounce and maybe you can get out of it. You probably have your theta drop off pretty quickly. if it winds up dropping all the way down to like the 170 or so and bounce off the 200 moving average, you're probably looking at maybe like a couple week play here back up to where you can get out of it around 180 or so as it retests into some of these moving averages. That'd be kind of my play. Anyways, that's kind of my thoughts. I wouldn't want to play this directional though. All right, let's keep right on rolling. VIX. VIX. Yeah, we got this. Looks like a flag pattern. Wow, this does look like a flag pattern. Kind of setting up in here. You can see this. This is a pretty wide flag pattern too. You don't typically see them that wide. But yeah, nice flag pattern. Moving average come up, supporting it. Looks pretty good. And this would be the other thing that would maybe possibly even scare me if you sell options for like next Friday for Amazon or something like that, is if we do break out higher here for the next like week or so, if we continue higher here on the VIX for the next week, like how far would Amazon drop? And if it gets below that 200 moving average, that's a much longer term kind of positioning. You'll be in it for a while. My opinion, you'd probably be doing it for a while. Now, I have no way. I absolutely do not think Amazon would drop off that much. Like that would be some catastrophically bad earnings type of scenario, and we are not seeing anything like that from big tech. We're not seeing anything like catastrophically bad in big tech. So DXY bouncing back pretty decently today. GLD Gold Trust hanging tough with how much dollar has bounced today. Yep, just continue to be bullish on any kind of dips. And the drop off in yields. All right. So yields, are they going to actually hold below this 4% level over the medium and long term? Obviously, we try to hold below it back here at the, kind of the beginning of the year, late December, beginning of the year. And yeah, I mean, we've had multiple days down on yields. Yeah, I mean, it makes sense that we probably at least come back down to these levels, which then we're gonna have to see what bonds look like. But yeah, I mean, yields don't look too bad. How are the 2-year? And obviously, we're getting a lot of fallout from FOMC. 2 years actually back down roughly to these lows. I mean, we're basically back down to those lows that we were putting in back at the beginning of the year there on the 2-year. And then 30-year. So the 30-year finally did break this mid-June low down yesterday. Looks like it's going to continue lower. Okay. A little bit of a bounce here on the 10-2 inversion off the 10 EMA coming up. HYG. So this is kind of one thing that stinks about the HYG, but they did pay a dividend. So 40-cent dividend. And they're down 44 cents. So, I mean, pretty much all of this move down today is, I mean, they basically paid a dividend. So there you go. You can basically say, not much of a big move today. It's mostly just a dividend gap. Other than that, I mean, you can definitely break through these moving averages, and people traded off the moving averages, especially breaking down. So, LQD, a little bit of an upper wick coming in today. TLT, a little bit more of an upper wick. Okay, so the TLT did wind up breaking through the high that we put in back in June, and even the high that we put in kind of at the end of May or March. That's the end of March. So, man, I'd imagine we probably pull back here maybe Friday, Monday, if this isn't like a top and we roll over. But nice look, because this is a pretty good upper wick that's coming in during the day, and we're not breaking this high from mid-March. So you're probably going to be looking for dip buying opportunities right now. I'd say that, like, we're in dip buying mode on the TLT, most likely. And you're going to have one here at this high, which is about 94.90 or so, whatever this like June 14th high was. And then you're maybe looking for it off the moving averages and then this downtrending line. So you're going to have a pretty good zone here of probably dip buying. But I will say, I will say this: if we get through, just eyeballing it, probably through, 93 or so. If we get back through 93, 92 and a half, I mean, that then sets up like this is just a false breakout and we're coming back down. But I'm just trying to throw ideas for possible stop loss locations. All right, let's take a look at sector rotation. How are things moving for the day? Energies, industrials, tech, lower end of the day. Discretionaries also underperforming. Financials underperforming. Outperformers, materials outperforming, staples, healthcare, utilities, communications, and real estate outperforming. Now, communications is outperforming. Why? Meta, earnings, gap up, doing pretty good. As far as intraday price action, energies, big lagger right there, energies. You can also see tech, the big change that happened in tech, right? They were doing pretty good up until about 20 minutes after the market opened. And then you can see they just started really dropping off and currently underperforming. So, there you go. Anyways, discretionaries, industrials, financials, tech all underperforming pretty good, as well as materials. Communications a little bit underperformance. So that's why you kind of look at this without the gap, because you can kind of really see how the XLC is doing without the gap, right? When you take into effect of the gap, the XLC looks pretty good, but actually a little bit underperformance during the day. Real estate also is outperforming. Healthcare, staples outperforming, and utilities doing pretty well during the day.